Okay, hey, good
Hey,
morning,
hey, good
everybody.
morning, everybody.
Let me hit the mute button. All right, hopefully that gets the background noise back down to a minimum. Thank you all for joining live this morning. We're just going to jump right into it. There's not a tremendous amount of news flow to go through. The news the last 2 or 3 weeks has just been really sparse as far as grains go. So we'll just kind of cover the highlights real quick. I think the number one issue is the weather that hit Iowa earlier this week. It looks like the best information at the moment is that 15 million acres of Iowa ground was impacted by the high winds, but we don't know what the damage is. We know there is damage, but the report that the estimates are between 100 and 500 million bushels that could come off the crop. So the market hasn't reacted to that news yet. We'll just have to let it kind of play out, see what happens. I don't think that the USDA is going to uh, incorporate that storm into this report. I think they'll probably put a footnote in and say, "Hey, we know what happened, but we haven't, but it's too new. We don't know enough information yet. We'll make updates to that last year, or we'll make updates to that in later reports." And they'll probably treat it very similarly to what they did with the major snowstorm that came through North Dakota last year. If you remember, early on in the year, North Dakota got hit by that snowstorm, and we lost 350 million bushels of corn. And the USDA just footnoted it. So I think they'll follow the same treatment there. Um, so then the other news that is out there, I know we're probably all paying attention to it, is school restart and the football season kind of coming to an end. We've talked about this a lot. If we're not playing college football, ultimately what that says to me is that's a lot of fuel that's not going to get burned. So if we slide closer towards shutdowns, I think that becomes really dangerous for the corn market because clearly we've got to be grinding ethanol or our carryout's gonna swell. So let's look at what the kind of the ranges of the um, of of the report, what they could do, what they could mean, and what variables could come out. Let's start with the July report, which is in the column. This is taken straight from what the USDA published, right? In the last report, they lowered the carryout significantly, right? That's a significant change in carryout number right here, and they did that because the acres dropped. And price, even though carryout, the price of corn 7 days later fell 22 cents, and I'm going to show you that here in a second. But I think that was interesting because the trade immediately discounted this number, and I don't think it's because they thought the supply was too high. I don't think they thought we had a smaller crop. I really think the reason we discounted this number is because they think that this use number is too high. I think most traders think that the ethanol grind isn't quite as good as what the USDA is saying it is, and so that number is probably going to shift. So here, if we take the last report and call that our neutral report, right? That's a carryout of 2.7, and we increase yield to 181.5, which could be conservative. We're seeing estimates as high as 185, and we hold demand, our carryout goes back to almost 2.9 billion bushels. What scares me is if this number does something crazy and drops to, say, 13.5. If that happens over the next few weeks because we're not burning fuel and ethanol gets back in trouble, then there's your bearish case. The bullish case is China. If you're paying attention to the news, even though it's pretty hard to find, China's been flooded through their major growing region, and the Three Gorges Dam has been in trouble. So below the Three Gorges Dam, there are 400 million people, but about 20% of the world's food production lies right below it, and that area has all been flooded. So China has been selling their stocks at record prices, right? The price of corn in China is near an all-time high, and they're selling those stocks out of their state reserves, and they're starting to replenish those through imports. And we're the only place that they can come get that. So they're selling their reserves at a high price and replenishing them with low price U.S. corn. That could be a black swan that increases this number radically if they were to come through and buy. Now, I don't think that has anything to do with the phase one China deal, but if we don't, if this report raises the yield and decreases demand because of ethanol, and the market fails to react and doesn't crash, then that tells you that something larger is going on. And I think that that's what it could be. So we still have a pretty wide range of possibilities of what could happen. But I think the safest way to play this report is to be hedged, to be patient, and trade it as if we're going to shut down. If you're a farmer, I think that's where your brain's got to be, is that, oh no, ethanol is going to stop. And if ethanol stops, that's bad for futures price and that's bad for basis, right? So so both of those variables mean you need to be shedding risk by setting basis and holding hedges. So I think this is close to where the number will end up today, but it's anybody's guess. I want to show you this chart. This is a pretty cool chart. This red line is the USDA plotted carryout for corn. Plotted in the black line here is the price of corn. And what's really interesting to us as we look at it is, here's the last report where we dropped that carryout and we immediately sold back off. And if I back this chart out, when I back it out too fast, it changes. I lose the price overlay. It moves. So I'm not going to do it because I want to keep the chart accurate here. But if I back it out and you look at this price level against this carryout, we're oversold for this carryout number. This number at 2.6 is consistent with 2016, 17, 18. And we are trading at or below the low end of the range for that carryout number. So any price lower is trading a significantly bigger carryout than this. So it's a futures market, not a past market, not a present market. The trade has already discounted it out. And I think we've got a recipe here where we could actually get a bullish surprise coming off of this report if it's not overwhelmingly bearish. And another reason we think that is because of the way this primary daily chart looks on your typical layout. What we have is a failure to accelerate to the downside so far. And if we didn't have a report today, we would start to talk about this is starting to turn into a move that you don't want to chase, even if you're trying to be short. We've been oversold for a long time. We're at the end of a major trend. We have this gap, which could end up being an exhaustion gap at this point, and we're just not getting the acceleration to the downside that you would have expected when this low broke. So now maybe we're just biding time and waiting for today, and we're gonna crash this thing to 280 today. I mean, that can happen, but outside of those black swan events of shutting down and COVID, I think corn's trying to base if our carryout's 2.7. I really think the downside is limited at that carryout number. We've got to get above 2. We've got to get above 3 in order for us to really push lower. So we're pretty neutral corn until this report comes out, and then we'll see what happens. All right, let's look at beans, because beans probably have more risk than corn does. The carryout number on beans, if it comes out at 52 or worse, then it's not a good situation for soybeans. And we want to be looking at this 56 level. If 56 breaks, which isn't that far away, we can get there in about 2 seconds when the report comes out. If this level breaks, then I think we expect new contract lows to come in beans. And what would drive it there, right? It's huge yield, and China just hasn't bought the volume that they said that they were going to buy. So beans are at risk of coming to a new contract low, and the upside to beans, I think, is pretty limited at the moment. I mean, I don't see anything to get excited above unless we can take out these most recent highs. I think we're bearish below this 912 level, and we're going to hold that for quite a while. Unlike corn, at this point the weather's pretty good. There's just not the black swan events that are going to step in and change this market unless China comes in and buys 10 million metric tons, right? If they come in and buy them all, then we can change the balance sheet and we can work higher. But until then, I think we're going to be trading a balance sheet that looks really nasty. Here's where we were last time. We're talking about moving it all the way to 700 million bushels, darn near up 75% on the carryout from where we were on the last report. Now, beans know this. They're not surprised. That's not going to be a surprise to them, but I think they're waiting on confirmation, and we can work lower. We're seeing yield estimates as high as 54, and if we do that, we take our carryout to 1 billion bushels. At that point, I think we get really cheap. Now, if we were to plummet and take out new contract lows, and if the dollar were to continue to weaken as well, now you've got this recipe where beans are overwhelmingly cheaper on the world market. So I think a big sell-off is a short-term event. Especially if the dollar stays weak, because that just makes us so competitive to everyone else. So we may price these moves in and then bounce really rapidly. I saw some studies floating around the other day that talked about corn, and the average corn move off of the August report is between 25 and 50 cents down. So average was 37. So if we were to do that, right, and drop 40 cents, we would drop to 280. But then within 60 days, we've retraced 100% of that. So that would be a nice volatility event that could actually be helpful for guys, especially if we were able to bank the hedges and hold on to our cash. So I don't think bearish reports are the end of the world, because I think we're going to discount that pretty quickly, and we're going to find buyers if we crash. Wheat. It really went crazy. We whined and moaned about this move for several weeks here. It really was choppy and difficult to trade. We finally broke out of that range and have started that down move. But what we have are divergences on your MACD histogram. So that's telling us to ignore this move, don't buy it, don't sell it, be prepared to own bushels very soon. Now, I think if corn breaks, wheat's going to go with it. If beans break, wheat will probably follow there as well. But I think, like everything else, this is going to be a relatively short-term move. So we would be in the camp of probably an early harvest low for corn, and I think that's going to put a base under wheat too. I just don't know where it's going to be, whether it's here or 260 or 280. We just don't know. But we think that that's probably the most likely scenario to happen, is wheat follows, bases, and then can work back up into this range. So if you're looking at wheat acres moving forward, wheat's got a really important next 30 days, right? Because it's got to tell us if it wants acres or not. And right now it's telling us it doesn't want them because the world supplies are just so high. So we had hoped that wheat would rally, and if corn was down, it would go buy acres. And I think we're just being told clearly we don't need them. So we're going to discourage corn production. We're going to discourage wheat production. We're just going to discourage everything and make it difficult. So I think that tells you to be patient if you're looking to make plans. Stick with your rotations and be patient. That's the best advice I think you can be given. That is everything I've got, because all that can change as soon as that report comes out, right? If it comes out and there's surprises, we'll get back to you as quickly as we can on what it means. But I think we're looking at increasing carryouts on both corn and beans. We'll see if the market reacts negatively or if it's already been priced in. And we will talk to you again next week. Thank you guys for joining.